Ladies and gentlemen, good day and welcome to Tube Investments Q4 and FY24 earning conference call hosted by IIFL Securities Limited. As a reminder, all participant lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anupam Gupta from IIFL Securities. Thank you and over to you, sir.
Thanks, Ria, and good morning everyone and welcome to the results conference call for Tube Investments of India for FY24. From the management we have Mr. Vellayan Subbiah, Executive Vice Chairman for TI, Mr. Arunachalam, Executive Chairman for TI, Mr. Mukesh Ahuja, Managing Director, Mr. A.N. Meyyappan, Chief Financial Officer, Mr. K.R. Srinivasan, President and Whole-Time Director for the Metal Form Product Business, Mr. Shivdeep Singh Jammu, Vice President for TPI, Mr. N. Govindaranjan, CEO for CX for Innoventure, Mr. K.K. Paul, CEO for TICMPL, Mr. S. Gopal Krishnan, CFO for TICMPL, and Mr. K. Murali, President for Business Development. To start off, I'll hand it over to Mr. Subbiah for the opening comments and we'll start the Q&A post that. Over to you, sir.
Thank you, Anupam, and good morning, everybody. The Board of Directors of TI met yesterday and approved the financial results for the quarter and year ended March 31st, 2024. The board has declared an interim dividend of Rs 2 per share in February 2024, and the same was paid to shareholders in March. The board has now recommended a final dividend of Rs 150 per share, 1 rupee 50 paise per share for the financial year 2023-24. Revenue for the quarter was 1,962 crores as against 1,663 crores in the same quarter previous year. And revenue for the year was at 7,611 crores compared to 7,236 crores for the previous year. PBT for the quarter was at 318 as against 301 crores in the same quarter previous year. And PBT for the year was at 970 compared with 876 in the previous year. ROIC was at 54% for the year ended 31st March 2024 as against 55% in the previous year. Free cash flow for the quarter was 104 crores and the cumulative free cash flow for the year was 376 crores, which was 51% of PAT, mainly driven by additional capital expenditure in some of our existing businesses. I'll go through a quick review of the businesses. The engineering business has revenue for the quarter at 1,276 crores compared with 1,044 crores in the corresponding quarter of the previous year. Profit before interest and tax for the quarter was 160 crores as against 132 crores in the corresponding quarter of the previous year. Revenue for the full year was 4,921 crores compared with 4,562 crores and PBIT was at 617 versus 549. That was for the engineering business. Metal Form revenue for the quarter was 386 versus 347. The PBIT for the quarter was 42 as against 45 in the corresponding quarter of last year. And revenue for the full year was 1,519 compared with 1,424. And PBIT for the full year was 187 crores as against 174 crores in the previous year. The mobility business revenue for the quarter was 154 compared with 155 in the corresponding quarter. And losses before interest and tax was 9 crores as against a loss of 5 crores. Revenue for the full year was 664 compared with 800 crores for the previous year and loss was 18 crores PBIT before interest and tax versus 17 crores the previous year. Other businesses, our revenue was 230 compared with 191 and PBIT was 17 as against 11 and full year 834 crores compared to 768 and PBIT of 65 compared to 48. At a consolidated level, and that's consolidating in all of our subsidiaries including CG Power and Shanti, and Clean Mobility, the consolidated revenue was 4,490 as against 3,778 in this quarter. And our PBT before share of profit of an associate joint venture exceptional items and tax for the quarter was 401 crores as against 403 crores in the corresponding quarter previous year. TI's consolidated revenue for the year was at 16,890 crores as against 14,964 crores in the previous year. And the profit was 1,683 crores as against 1,592 crores in the previous year. CG Power, a company in which we have a 58.05% stake, had consolidated revenue of 2,192 for the quarter as against 1,903, and PBIT was at 301 as against 281. For the year ended March 31st, 2024, CG's consolidated revenue was 8,046 as against 6,973 in the previous year, and profit before tax was 1,158 as against 1,002 in the previous year. Shanti Gears had revenue of 154 for the quarter as against 123, and profit before tax was 32 as against 27. The revenue for the year as again was 536 as against 446, and profit before tax was 110 as against 90. Commenting on the financial results, Mr. M.A.M. Arunachalam said TII demonstrated resilience, achieving a consistent growth in consolidated profits before tax, driven by a strategic focus on cost reduction initiatives and operational efficiency through Kaizen. Exports during the year have grown by 14%. Notably, our subsidiaries CG Power and Shanti sustained their impressive performance. CG Power secured approval from the Union Cabinet under India's semiconductor mission to establish an outsourced semiconductor assembly and test facility with an investment of 7,600 crores over 5 years. The investment will be supported by government subsidies, equity, and limited bank borrowing, with technology and joint venture partnerships with Renesas and Stars Electronics. Additionally, TII and its subsidiary TI Clean Mobility forged an agreement with GEF to raise 580 crores through compulsory convertible CCPS. TII's board has recommended a final dividend of rupees 150 per share for the financial year. So, Anupam, I'll stop with that, and we'll be happy to take questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Jinesh Gandhi from Ambit Capital. Please go ahead.
Hi. My first question pertains to the clarification on other expenses on standalone. We have seen
Can you hear him clearly?
Yeah, is it better now? Yeah, am I audible now?
Jinesh, yeah, that's better.
Yeah, my question is on first clarification on the other expenses, which seem to have gone up quite substantially in fourth quarter, and because of which reported EBITDA margins have declined. Any one-off in other expenses which you can call off, or what's the reason for increase?
So it is one time.
Go ahead. Okay. No, there are a couple of one-time expenses, including political contributions that might have contributed to it.
Okay. And the large part of Delta, which would be about 50 odd crores, would be one-off?
Sorry?
Almost one-off quantum would be, what, 40-50 crores or lower than that?
No, it's lower than that. It's lower than that.
Okay. And second question pertains to the engineering business. So, given that FY24 was a year where we started to see recovery in exports, can you talk about how did exports grow in FY24? What was the contribution in FY24 from exports, and how do you see that scaling up?
So exports this quarter was pretty good. There was a good growth in the engineering business as well as the other businesses. Exports as a percentage totally was about 14% in this financial year. And we see a good leads available going forward with a couple of OEMs getting approved in the short term. So we are bullish about exports going forward.
Okay. And effectively, our target of taking it up to 20% would play out in the next couple of years.
Yeah, that's right.
Got it. And the other question pertains to the large diameter tubes. So given that our expansion will be completed by second quarter, what kind of revenue can we expect from the fully expanded capacity, including the first and the second, the existing capacity and the new capacity put together?
So like I said that capacity expansion will be over by Q2, and then because we are investing into capability, then we have to go for approvals of the large customers for which we are doing it, and then there'll be PPAP process followed, and there'll be good headroom available for enhancing revenue from that expansion.
Okay. Can you quantify in terms of either in terms of the capacity addition or the kind of revenues which we can do?
Maybe you can take it about a range of around 30 to 40% excess capacity will be available for this expansion for large diameter tubes.
Got it. A few more questions that I'll fall back into you.
Thank you. Next question is from the line of Nishit Jalan from Axis Capital. Please go ahead.
Yeah. Thank you, sir. So I just wanted to check one top-down thing from you. Tube is getting into a lot of new businesses, right? And so also CG Power. So just to understand, how are you deciding which company will enter into which business? So for example, medical business or the optic lens business was in tube, while the semiconductor business and all is part of CG Power. So any top-down thought process as to which entity will be part of which new businesses that you enter in future?
Yeah, no, I think that's a good question. See, broadly, the approach we've taken is kind of that CG is sticking to businesses that are kind of what I would say kind of in the power in industrial and electronics areas. But I would also say that I don't think it's kind of I don't think it's basically going to be predetermined, right? So basically, once an opportunity comes up, we basically try and assess what is a better long-term home for it. And also you have CG's and TI's management also doing some independent valuation and coming up with opportunities for themselves. So I don't think there's a deterministic path by which we can tell you ABC will be there, because a lot of these businesses are new businesses for us.
Okay, got it. And so, I think a couple of quarters back, you talked about building capabilities on electric vehicle side. I think you did highlight that right now we are more like doing assembly and procuring components from outside. Just wanted to understand any progress that you have made on building capabilities. How big is the R&D team now? And in the next 1 to 2 years, which kind of components will you look to source in-house or build in-house rather than buying from outside?
Yeah, so again, we're developing an approach to it. I mean, I don't know if that's a question specific to CG, that'll kind of be that you can send. Sorry? For tube?
Tube, yeah, tube.
No, for tube, so specifically, I mean, from a TI Clean Mobility R&D, that's first going to be focused on vehicle integration, right? And then we basically start thinking on the component side. And like we've articulated before, CG will be more focused on the component side development, and TI Clean Mobility will be more focused on vehicle integration and being an OEM. So I don't know if that gives you clarity. If you want to know more about TI Clean Mobility R&D, we can kind of give you details on that.
So basically, for example, BMS, battery pack, anything. You have talked about that motor will come under CG, but what about the BMS, battery pack, or anything that you decide to do on the software side? Because that will be an important part of the EVs. So I primarily wanted to understand more on the R&D capabilities of tube other than CG.
Yeah, so battery packing and software development obviously will kind of be part of vehicle integration. That's overall software development. Paul, who's on the call, can give you a bit more detail as to what we're doing on R&D for TI Clean Mobility. Paul, do you want to take that?
I think currently, we are focusing on the vehicle integration for a different platform. We currently have about a 200 members strong central R&D team, and we are further strengthening it. So that's one piece. The other piece that we are concentrating is building the software capabilities over the next 1 year period, where we would like to, take over much of the consumer experience part of it through software, and then have a lot of control over the powertrain, that is basically battery, BMS, motor, and controller related with software and hardware. That's the direction that we are taking to truly become quite technologically superior from a software integrated hardware piece. Yeah, trust this answers your question.
Okay. One last thing on that. If we see this year, FY24, we did see a good growth in two-wheeler, double-digit growth, and also a good growth in passenger vehicle segment, including premiumization. But if I look at our engineering and metal form revenues, the growth is about 7 to 8%. Any particular reason? Are we running out of capacity somewhere, or our customers have not done well? Because our expectation was that we could have grown in double digits given how the industry is shaped up. Just wanted to understand and connect that aspect.
So, to answer this question, we have grown in the double digits only because, like we shared the last quarter, raw material prices are comparatively down as compared to the previous year. Otherwise, our growth in the quarter 4 and two-wheeler, like you mentioned, it is picking up. We have grown in line and some places even better than the market.
Okay. Thank you so much.
Thank you. A reminder to all participants, you may press star and 1 to ask questions. Next question is from the line of CA Garvit Goyal from Invest Analyst Advisors LLP. Please go ahead.
Hi, am I audible?
Yes, sir.
Good morning, sir. My question is on engineering and metal form part. So given that our engineering, metal forms and the industrial systems division contribute over 80% of our revenue, and we have achieved a Y-on-Y growth of 8 to 9% in FY24. So what are the specific strategies does the management plan to implement to sustain and potentially accelerate this growth in the coming years? And additionally, are there any particular markets or innovations that the company is targeting to enhance our competitive edge in these areas?
So our strategy for engineering business and metal form division continues to be first grow in line or better than the market for the domestic market, and there is a clear-cut focus for the exports because our market share in the exports are pretty low and there is a good headroom available for growth there. And we are focusing those segments to drive the growth. As well as we are targeting in the EV evolution is happening in the country. So there are many applications which are emerging as new, and we are focused on that. And the way the EV business evolves, we'll be participating those new opportunities, which will be in area of weight reduction, in area of the improved efficiency, because those are the new norms getting set up in the EV industry. So we are focused on.
And so our new verticals like mobility and others, these are expected to drive the growth future. So my question is basically, can you share how the things are shaping up across the new verticals? Like, how do you expect the things to ramp up from here? If you can just share the indicative timelines, like when are we expected to achieve the break-even in mobility, for example? Like last quarter, you mentioned Q4 will witness the growth in EV business, but we are Q1 down. So can you please put some color on it?
Yeah, so I think specifically for EV, we've articulated that we won't give any, forward-looking guidance because it's basically, there are just, there's too many kind of uncertainties in the business. What we've clearly articulated for EV is that now we have 2 products launched. The three-wheeler product is doing well in the southern market, and now we're entering the northern market. And we've also launched the trucks, which is still kind of in its early days of kind of its sales cycle. what we've also kind of clearly articulated is that, with the fundraising and we will not depend on TI for funding, the parent standalone TI for funding in that business. So that business is pretty much self-funded now. I mean, as in, like, it is funded into the entity. And so there's enough equity in TI Clean Mobility itself to fund its growth. So more than that, kind of giving specific guidance. So those are the two businesses that are selling now. We're hoping that in the next 2 quarters or so, we will get the small commercial vehicle also out. And so that's the status on that business, on the Clean Mobility group.
So what is the overall outlook for FY25? That will be the last question from my end.
For Clean Mobility or for TI or for what?
For TI.
So again, we've not, basically, we've not specifically guided, but, the growth has been kind of in the teens, right? Kind of, what I would say is kind of in the teens is where kind of growth has been. We assume, we believe that will continue.
Okay, that's it from my side, and all the best for the future.
Thank you.
Thank you. Next question is from the line of Nikunj Agarwal from White Whale Partners. Please go ahead.
Hi, this is Hardik here. Can you hear me?
Yes, sir. Please go ahead with the question.
Okay. So just going back to the, one of the questions asked earlier in terms of how you decide on entering new businesses. I think a while ago, maybe a few quarters ago, from what I understand, the thought process was that anything related with motors and with power would be coming through CG Power, and the rest of the unrelated businesses, let's say, like medical equipment or even electric vehicle would come through Tube. But right now it seems like, has there been a change in the mindset or the thought process here in terms of how new businesses are seeded?
No, I think, the question keeps coming back to, obviously, kind of, if there's going to be anything that's going to be related to motors or power, it will naturally go to CG, right? Whereas a natural fit, I don't think there's that much of a question, right? I'm saying kind of where something may not be 100% natural fit, we will have to evaluate best fit when the opportunity comes up. And that's all we're articulating. So I don't think there's any change. We're just kind of elaborating because it's a bit difficult to kind of make a statement on where it's not so deterministic, right? I mean, so if there's a new business, if you take medical, for example, there was not a natural home in either place. It was a new business for us, right? So that's the question where, what we're seeing is like when opportunities like that present themselves, then we decide kind of, on where we think the best fit will be.
So, but then that is a bit of a change in shift, right? Like, for example, if medical equipment were to come, if you would be open to kind of possibly putting it through CG Power as well. You're open to that?
Yes. So, I think if you're asking, so I would broadly say, CG Power is fairly well defined in terms of the businesses it takes on, right? But, like I said, if unrelated things come on, we will take a look at kind of where is the more natural place to house it. So, yeah, if you see that, yes. Yeah, so we can say that is the way we're thinking about it.
Got it. Just two other questions. One was, you mentioned about how metal form, the top line was slow because of the correction in commodity prices. But even if I look at the EBIT, the EBIT is just the conversion margin, right? And so the EBIT should be growing kind of in double digits, which it's not. So anything else that's like kind of weighing on the metal form product business from a profitability perspective?
Like we shared in the previous quarter, in metal form, particularly we are finding railway business is getting more competitive, and that is a little bit pulling down the margin. But otherwise, all the other C business, the margin perspectives are okay. Railway, we have yet to figure out the answer for margin.
Okay. And on the electric vehicle front, in December quarter, we did about 81 crore revenues, but in March quarter, it's about 57 crore. This is a very kind of nascent business, you would have thought like there should be a big ramp up on a sequential basis. So any issues or concerns out there?
Paul, do you want to take that?
No, I think as we said that, these are newer businesses and actually, the volumes or the projections actually will start firming up as we get more traction in the market, and we are currently on that basis. With the first products that we've launched in the three-wheeler, we made good progress, and gradually a lot of products will be launched this year, as Mr. Subbiah was saying. And over a period then, we will have adequate representation in the market across the different segments, be it on the heavy commercial vehicle side or the small commercial vehicle side, and then a few more variants on the three-wheeler side, followed at the end of the year with the EV tractor launch. So with all this, then we should be in a position to, garner some steady business and steady volumes, and that's the plan that we are working on.
Specifically to your question also, there was in March, for the month of March, because of the change from FAME to the new scheme, there was a drop in three-wheeler primary sales, right? Though there was an increase in secondary sales. So that would have also swung the numbers for the January, February.
Got it. One last quick one. There's an approval being sought for 350 crore of long-term borrowing. Is there any specific plans, to deploy that, or is it just an enabling?
No, we always kind of, at least once a year, we basically kind of take those approvals. There's no specific plans driving it. It's just a blanket approval that we take.
Okay, got it. Thanks so much.
Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask questions. Next question is from the line of Rishabh from RBSA Investment Managers. Please go ahead.
Hi, sir. Looking at the company, say 5 to 7 years from now, how much percentage of the total profit pool do you think would come from TI 1, 2, and 3 respectively? Is there any aspiration or target on this?
Well, it's a bit tough to say. Ideally, we'd like to be a third, but I don't know if we kind of evolve in that way too.
Okay. And sir, any traction or progress on CDMO medical devices and the camera modules? Anything that you'd like to share?
CDMO, Govind, you just want to give a quick update? Govind, you're there?
Am I audible?
Yes, sir, you're audible.
Govind, yes.
Okay.
Govind, go ahead.
As far as the lab is concerned, we already started receiving custom synthesis orders. We have received 6 orders. In fact, 2 of them have been delivered even ahead of time. As far as the manufacturing side is concerned, we commissioned the Kilo lab, and it's fully functional. We had even built before March to get the tax benefits. Currently, the CGMP pilot plant is under construction, which we plan to commission it by September. So that's the update as of now.
Mr. Rishabh, does that answer your question?
The medical devices and camera modules also, if you could share some update.
Medical, like we discussed last time, we took over this company about 6 to 9 months back. And as of now, we are investing into the capabilities of the company and getting into many products within the Lotus framework, and we're looking for the future opportunity. So we expect a good growth going forward for this. Okay. And coming to the camera module, this month our samples from the Korea, one of the customer in the Korea got approved, and we are expecting a pilot load order in this month. and then maybe based on the pilot load performance, then we'll be ramping up going forward. So maybe another quarter down the line, we'll be able to give you better update. But quality perspective and technical perspective, there's a good news. Things are in order. We have to see how we ramp up this capacity going forward.
Okay. Thank you, sir. Wish you all the best.
Thank you.
Thank you.
Thank you. Next question is from the line of Manish Kumar, an investor. Please go ahead. Could you please speak a little louder, sir? No, sir, we're not able to hear you clearly. Mr. Manish Kumar, you can go ahead with your question.
Yeah, is it better now?
Yes, sir, please go ahead.
Yeah, so my question is pertaining to the investments purchase of 563 crores. I was not able to find a lot more details as to what these investments were. So could you please shed some light on that?
Yeah, that 650 crores is actually we have invested 333 crores in TICMPL, Clean Mobility during the year, and 233 crores in Lotus Surgicals when we acquired in May. And we have invested some 80 crores in 3Expert, that's a medical company, CDMO. That's a breakup.
Okay. And how, what kind of synergies were, looking that these investments are going to make in the existing businesses of GI investments?
So I think the broad point is we always talk from a synergy perspective that we're not driving this in a fully synergy-based approach. We're driving this based on opportunity sets that we see in new businesses over time. Right? And so that's the primary focus of some of the expansions. And I think we've articulated this also before.
Yeah. Thanks a lot. Thank you.
Thank you. Thank you.
Thank you. Next question is from the line of Salil Desai from Marcellus Investment Managers. Please go ahead.
Thank you. I had a question for Mr. Nayappan. So the segment assets less the segment liabilities in the electric vehicle segment is still negative as of March 24. Can you just explain how to read this number?
Yeah. I'll just explain you that. See, actually, whatever the negative which you are seeing is after considering the CCPS, whatever we have got it there, almost around 1,700 crores which we have got it. That is coming as a liability there in that. That's a major reason for it. Then apart from this, we are also having a cash in hand of something like 750 crore there in that. After putting all this, that fixed assets, net working capital, CCPS and the cash on hand, it is coming to something like 61 crores as a negative over there. If you remove the CCPS and the cash on hand, then the capital employed in that business is 892 crores. That is what you would read it.
Right. So just to make sure I understand this, 892 crores is if we remove the CCPS and the cash on hand.
No, 1,700 is the CCPS. That's negative. Okay, that's cash on hand is positive 747. So you have to add approximately say 61 will become 892. That's what I can just say.
Okay, I understand. Right. And so another question for you was on Lotus Surgicals, right? We had this amortization of intangibles, right? Now, how much longer do you think that is likely to continue? Do we remain at similar EBIT levels as we are in this quarter, or is there a significant change that could happen?
Is the intangible assets which gets created at the time of acquisition. See, because the cost of the assets, whatever it is there in the books of accounts, say net fixed assets or whatever is there, that will be lesser, and will be paying based on the market value. And difference between these two will become a goodwill as well as the other intangible assets. Goodwill will be retained in the books, and balance will get amortized over the period. It will be approximately, it will be there for next 5 years or so. This whatever the amortization which is happening. Yeah.
Got it. And the last question is, if Mr. Paul could help, so the small commercial vehicles will also be as part of the same premises that you have in Manesar, or you need to create separate facilities for that?
Small commercial vehicles. So what's the question?
Sorry, what's the question on small commercial vehicle?
In where will you make these? Will these be new factory?
The facility is coming up in Chennai. The factory is coming up in Chennai.
I see. All right. And how much will you spend on it approximately?
Sorry, what was the question? How much?
Gopal, how much are we spending on the small commercial vehicle factory?
Total capex would be around 320 crores, sir. So far, if you look at the cash outgo, around 12 crores, there was a cash outgo. However, POs have been released to the extent of 80 to 90 crores.
Understood, sir. Thank you so much.
Thank you. Next question is from the line of Bhalchandra Shinde from Kotak Life. Please go ahead.
Sir, on EV, would like to know your roadmap, how we see growth, especially on the EV tractors and EV three-wheelers, and on the dealer side also, network-wise, how we are improving there, and what kind of a growth targets we are targeting over next 3 to 5 years perspective. And this quarter, actually, sequentially, there was a decline. So in that perspective also, but it's just a short-term phenomena. We should see relatively a growth happening on that side. If you can give color on that.
But two things, right? One is we just said.
Sorry?
One is we just said we won't give long-term guidance, right? So your question on 5 to 7 years, we're not giving long-term guidance. I think I've answered some of the points before in terms of, how large a business I think it can be. But again, we don't get into too much long-term guidance in time. And second, we talked about this point about the sequential growth issue, which is March had low primary sales for three-wheeler because of the change in the incentive scheme. But Paul, you can kind of elaborate further. I think you said it.
Yeah, I think two things. One is currently, if you see, we are predominantly present in South and slowly started being present in North. By the end of this year, we have a very aggressive dealer expansion plan that will support the volume plan, and we are working around with that. That's number one for the three-wheeler business. And additionally, as I mentioned earlier, some newer products also will come into the picture that will help us to, further increase the volumes as we move along. So that's as far as the three-wheeler is concerned. The other ones are, the products are getting developed. They'll gradually get launched during the course of the year. And we'll have to take it on from there in terms of creating. What we are actually concentrating on is really to build a reasonably superior product, that we are able to then create a pull in the market and have a traction and thereby have better customer adoptions. So that's the journey that we are on, actually, at the moment.
Okay. Thank you. Thank you.
Thank you. Next question is from the line of Anupam Gupta from IIFL Securities. Please go ahead.
Yeah, thanks for the opportunity, sir. So a couple of questions. Firstly, on the EV side of it, on the three-wheelers, you have a passenger offering, and so why not launch a cargo offering at the same time and be in that market as well? So what is the strategy there in terms of thought process? And similarly, on the same lines, let's say if you can, you have earlier highlighted that you'll launch further models in terms of tonnages for trucks as well as in tractors. But what's the sort of timelines there as well? So if you can give some picture there.
See, I think on the three-wheeler piece, some of these vehicles that you mentioned will be under plan and we will get launched during the course of this year. That's the plan, and we are quite firm with the plan. Currently, a lot of these products are under homologation, under product reliability testing. So obviously, we are aware of the fact that we need to increase the range, and we will increase the range as far as the three-wheeler is concerned, including cargo, including e-rake, and in these segments. In all the others, the plans have been made. For example, the small commercial vehicles, the later part on August, September, we should see some traction there. And similarly for the tractor, and similarly for another variant in the IPLT stable on the heavy commercial vehicle side. So with this, by the end of this year, we should be in a quite good position in terms of the product placement for the initial phase of our plans.
Okay. Understand, sir. So the second question is related to the Moshine and maybe the broader electronics picture as you see it. So Moshine obviously gives you a small entry there. How fast can we ramp up, especially given the news which was going around a couple of weeks back? But broadly, what is the strategy there? Will you focus more on the manufacturing part of it? Will you look at assembly to start off with? What is the strategy if you can outline that on the electronics foray part of business?
So Anupam, thanks for the question. As you rightly said, maybe this was a small entry into this business. We are further studying this opportunities in this area, and at appropriate time we will share with you. And that's the area for focus for us going forward. So as of now, the investment was for more from learning perspective, and we are studying this market for us.
I understand. And so one question is on the core business. So let's say core business capex, you have already the projects are on, but if you can just outline what is the capex plan for TI India, the standalone business for FY25 and possibly FY26 if you have that number.
So we'll be investing close to 500 crore in this financial year for the core business.
Okay. And you said in TI CMPL it would be 320 crore for the SCV plant, and anything else, any large capex otherwise planned as well?
Basically, in three-wheeler there will be another 72 crore kind of a spend. And in tractor, we are looking at 30 crore kind of a spend. So all put together, for next year, the capex, would be around 471 crores.
471. Okay, so that's all from my side. Yeah. Thank you.
Thank you. Next question is from the line of Varun Arora from B&K Securities India Private Limited. Please go ahead.
Hi, sir. Thank you for the opportunity. So I just want to ask on the mobility sector, how the things are panning out right now, and if you can give some outlook on that front.
Can you come up question again? Maybe your voice was not clear, please.
Yes, sir. I'm audible now?
Yes, better.
So I'm asking about the mobility segment. So how the things are panning out right now? On quarter-on-quarter, it was a flattish. So can we expect the pickup in the demand or the outlook will be positive for the going forward in the FY25?
So this business is going through tough phase as of now because of the market conditions. Cycle market is not growing. And we are focusing in this business also export area, which is a little long drawn process. And also we are focusing on the e-bikes in this business. And so there is a work in progress. These are the growth area identified for the mobility business going forward.
Okay, sir. So again on lens, I guess the last participant already asked the question, but there was some news were going on regarding the Apple. So any development is going on that front? Some media actually, on the newspaper there were some news were going on, like in April, mid or somewhere around. So if you can give some gist on that, sir.
So as of now, we are focused on the lens business, which is basically goes in the camera module. And if any further opportunity comes, we will share with you at appropriate time.
Okay, sir. So last, just a clarification I need, by what timeline that the electric tractor will be launched and the commercial vehicle, the small commercial vehicle also will be launched, sir?
We're looking at the end of beginning of Q3 really. Actually, that's when it will get launched, both.
For electric, for both, okay? For both?
There is a small commercial vehicle which will be launched sometime around July-August period. That's the period. And the first variant of the electric tractor will be launched sometime in the period of October-November of this year.
Okay. Thank you, sir. So, just last one. So on the, I guess, the last phone call, you had said that, by the FY24, you'll have the dealership around 75 number. So have we achieved that target, or are we still on the, on the way?
Currently, you're talking about the three-wheeler.
Three-wheeler electric. Yeah, that's correct.
Yeah. Currently, we are at 63 dealers against the 75. But by the end of this year, we should be about close to double of these numbers as we expand in the north and the east.
Okay, sir. Fair enough. Thank you, sir. Thank you for the question.
Thank you. Next question is from the line of Vipul Kumar A. Shah from Sumangal Investment. Please go ahead.
Hi, sir. Thanks for the opportunity. Would you repeat the CapEx numbers for TI Clean Mobility, and can you break down it for all individual products again, sir?
Yeah. See, if you look at for next year, 24-25, the total CapEx outgo would be 471 crores. If you see the breakup, three-wheeler will be 72 crores, tractor 31 crores, and small commercial vehicle business will be investing 278 crores. And in truck, medium, heavy commercial vehicle business, we will be investing around 71 crores. And there will be some marginal investments in them and in central R&D functions. So all put together it will be around 471 crores.
So what will be the nameplate capacities for each of the business, sir? Can you quantify it, sir?
Sir, capacities, as we said earlier also, there will be. For example, the three-wheeler plant will have a capacity of 75,000, in terms of this. The small commercial vehicle plant that we are building will have a capacity. Once we have completed the entire thing, the capacity will be around 50,000 vehicles. That will be. The tractor currently has a capacity of 25,000 numbers annually, right? And IPLT once we add a line, we will have a capacity this year of around 4,500 numbers.
Last one, which I didn't understand your last comment, sir.
Last comment was on IPLT. So in IPLT, we are in the process of adding one more line. With that, the capacity this year will finally get to 4,500 numbers.
Okay, sir. Thank you. Thank you very much.
Thank you. Next question is from the line of Rahil Shah from Crown Capital. Please go ahead.
Hello, good morning. So this investment in the core business of 500 crores for this year, you mentioned earlier. So what will be that for exactly, and how will it help us?
So it will be helping us building the capabilities in the engineering as well as metal form division, which will be in terms of some money will go for capacity expansion, some money will go for capability enhancement.
Okay. And have you already started spending, like, has the CapEx already started? And that's the figure for the FY25, correct?
So most of this 500 crore will get spent in this financial year. However, some money will be work in progress, which should get spent by Q1 or Q2 of next year.
Okay. And on a consolidated level for the company, I believe you said, so you've been seeing teens growth and that should continue ahead as well. But when it comes to margins, what is the outlook there? Which businesses are you focusing on to improve those margins, EBITDA margins? So can you share a guidance or a directional outlook?
Either you will take this question, or maybe generally, Mr. Well answered, we don't give the future guidance, as already said that.
No, what are you looking for on a consolidated basis?
I just want to know on a consolidated level, if you can provide, if not an exact guidance, but a directional outlook, how will the margins improve, which businesses will lead to that? So where is your focus when it comes to improving margins?
So broadly, I think you understand the two largest contributors to ConCall right now are TI1 and CG, right? And both we have specific indications on what the margins are. And we've continued to maintain that we'll maintain at least these levels of PBT margins, which are north of 13% for both businesses today. So that I do believe will broadly continue, and those are the two largest contributors. Now, obviously, when we take at a ConCall level, we will continue to have TI Clean Mobility being the largest negative contributor, and I think that will also continue for this year. So you'll have to just kind of make your own kind of assumptions then based on that combination of things.
Okay, got it. And okay, yeah, that's it. Thank you. All the best.
Thank you.
Thank you. Next question is from the line of Jinesh Gandhi from Ambit Capital. Please go ahead.
Hi. My question pertains to the electric truck business. So I believe we were looking to start deliveries from fourth quarter. So can you talk about how many trucks did we deliver and how does the order book look like?
See, currently we have about 70 trucks on the road, all so far. And the order book that we have is close to about 35, 40, which we are in the process of executing now in the month of, May and June. That's where we are at. And we are working around with a number of customers, large customers, in terms of, proving the concept actually, because we'll have to prove the concept. Then we'll have to look at, what the savings are, demonstrate that. That's the kind of work that's going on when we are quite hopeful of building traction in the coming months, because these results are coming out very favorable when you compare it with the current ICE vehicles, what they are deploying. So that's as far as IPL is concerned.
Okay. So would it be fair to say that IPL Tech effectively probably will get into a material ramp-up mode only by end of this financial year or early next financial year, given that the process of customer approvals and all those things will take at least another 6 to 9 months?
Part of that work is in the process. See, some of this is a new concept. So one is the issue of, if it clicks big way, it takes a little time. There's a diffusion time that takes for people to absorb, to change some behavior, in terms of adoption. The benefit is very clear. That's the good news. Now we'll have to get them in terms of we're working around different models to see how, the adoption can start happening. And once a few adoptions, as we have succeeded, starts happening, there definitely will be others that will come into the picture. So that's where it is. We are hopeful of building up good volumes, but difficult to say at this moment what that will be. Nor would I like to say that. But works on in terms of building the pipeline.
Got it. And lastly, when we talk of the EV business, we have talked about investing of roughly 3,000 crore into this business. And so far, if I see it, we have invested close to 1,900 crore. That's what the sets for the EV business refer to. If I knock off cash, then close to about 1,200 odd crores. So incrementally, balance capex beyond this 470-500 crores of this financial year, what it could be going forward? Is this plan of 3,000 crore investment largely firm, or this will depend on how the business ramps up going forward?
So there's limited CapEx beyond this, but I think there will still be more development of vehicle development. So R&D will be there, and then obviously the build out of the businesses themselves.
Okay. Got it. Okay. Thanks and all the best.
Thank you.
Thank you. Next question is from the line of CA Garvit Goyal from Invest Analysts Advisories LLP. Please go ahead.
Hello.
Yes, sir. Please go ahead with your question.
My questions are answered.
Thank you. Next question is from the line of Nishit Jalan from Axis Capital. Please go ahead.
Largely on the three-wheeler electric vehicle industry, if you see, what we understand is that FAME was a very important part of the overall three-wheeler EV adoption. Now that is under uncertainty and incentives are coming down. Do you think that without FAME incentives also EV penetration can pick up in three-wheelers, or it will be slower than what you would have thought earlier? And do we have the PLI benefits that we will get in three-wheeler business, or it's not there?
No. There are two parts to your question. The first part is currently we don't have a PLI benefit as such in terms of this, in the three-wheeler business. That's number one. Number two is, see, the FAME has already come down. There are different component prices that are moving down, primarily the battery. So that should go a long way in building, giving some stability to the prices. That's the second piece. The third piece is, the TCO portion. That means the benefit to the customer, what we are seeing, is reasonably substantial. And we believe that from the experiences that we've got, there will be good traction. How much it will be, in what way it will be, we'll have to see as things turn out. The success really will work around how you handle a combination of factors, the product, the range, and the performance and the customer service and so many other areas linked with the customer experience. That should help us to, get through with the numbers that we are doing. Temporarily, yes, there may be a setback to FAME, but FAME is not completely gone. It's got reduced now. And, once the elections are through, I'm sure the government will work out some policies for some more time at least, till the EV adoption, as per their plans that they have made, it starts stabilizing. Along with that, we have to bear in mind that the charging infrastructure and many of these things are in active development, and if this starts developing, in a larger way, then that provides an opportunity for you to, right size your battery and therefore your cost. And therefore, a lot of that disadvantage one can obviate, actually.
Okay. Thank you for the detailed answer. So just one follow-up. After FAME incentives got reduced, did you take price hikes or you basically absorbed it given the reduction in battery prices and other cost reduction that you have talked about?
No, we did take a price hike. We took, and industry also took. And part of that absorption we did take, by ourselves for a certain period of time. But we are also in the plan of seeing, in what way, a bill of materials we can shape up so that we don't have that effort beyond the first half of this year.
Okay, thank you so much.
Thank you. As there are no further questions, I would now like to hand the conference over to management for closing comments.
No, nothing specific from my end, and then it's back to you.
Thank you. On behalf of IIFL Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.